Let's take the conversation forward more on the commodities front. We have Peter McGuire, Chief Executive Officer at XM Australia, joining in with us this afternoon. Thank you so much, Peter, as always, for joining in with us. I'm going to start with gold because if one is looking to buy any gold jewelry right now, it's become expensive wherever you look at it. What's the word that we should look at in terms of the yellow metal? Should we expect it to shine further, or maybe some bit of a correction is something that one could watch out for?
Well, good afternoon, Vinny. I think it's certainly got some upside from here. It's had an almighty rally when we put our mind back to, I was over there in Mumbai only a couple of months ago, and it's up the best part of $150 or more since then. So it's had a very strong move to the upside. And I feel as though that there's even more to go yet, I'd say, in this quarter. It's hard to forecast how much further aggressively it'll go. But in the short run, I think it's probably got, a 2350 to 2400 handle very, very quickly.
There has been a very sharp up move in the last 3 to 4 months itself. But what was lagging was silver, that other metal, and that wasn't shining so bright. But in the last 1 month, that too has managed to catch up a good 14-15%. Do you think going forward there could be a case that silver outperforms in terms of just the pace of returns versus?
I think so, Anisha, and I think a couple of reasons why. I think there's been tremendous under investment across that whole silver market, and that's been really over the last decade or more. There's the first part. You've got industrial demand, very, very strong industrial demand for silver, and you've got a market that has been very suppressed. $26.50 at the moment. As you said, it's rallied, but it was around that 22, 23. It was languishing. And now it's getting certainly getting some horsepower behind it, and I feel as though that's probably got more upside than gold over the next matter of months from a in the sense of a performance and a ratio to gold, of course.
Absolutely, Peter. What we're finally seeing is that everyone kept talking about the China economy performing. Now seems like some data points have come in where we are seeing that some bit of an improvement coming in the China economy, a recovery coming in there, especially in terms of when you're talking about the manufacturing activity as well. It's at a 13-month high in China. How should one be reading that for the other metals, whether you compare a copper or an iron ore? What is it that one should understand from this?
Well, I think a couple of things, Vinny. The gold, the iron ore market, it's come under some pressure. But the other, if you're looking across the, the base metals, the aluminium, nickel, lead, tin, zinc, they've all performed quite strongly. And we only saw last night on the LME, they're up, between 1.4 and 1.8%. Still relatively cheap. You've got copper knocking on $9,000 a metric ton's door, and tin running at around about 28,000 a metric ton. So I think there's certainly a little bit more horsepower again on those markets, more opportunity for upside. And I just think that they've been suppressed again for quite a while, and there just seems to be some daylight ahead of them.
Yeah, so a recoil kind of movement coming around in some of these commodities. But what about crude? For the longest time, it was tempered, just around that $85 per barrel mark. And finally, in a matter of a couple of days, that has managed to shoot up almost $89.90 now. What levels do you foresee for crude?
Yeah, I think so. I mean, when you're looking at it, it's had a tremendous run up. And also when you're thinking about where WTI is, 85 plus, 85 and a quarter, and you've got Brent sitting at $89.10, I feel as though that $90 will be taken out pretty quickly. And I won't be surprised probably, this month to take even 95. It's hard to forecast how much more aggressive, but it's had such a big move over since the start of the first quarter. It's been dramatic. And if you're going to see these geopolitical concerns start to really ramp up, then that is the answer to drive crude prices higher. So you've got the situation in Russia. We understand OPEC, and you've got geopolitics. So that's normally a perfect storm for higher prices.
Okay, perfect storm as far as the geopolitical issues are concerned. But just quickly to wrap up the conversation, you're on the dollar index and Bitcoin, because both have been coming off a bit. Where do you see Bitcoin headed from 70,000 down to 65? What next?
Well, I think it's probably evaporated a little bit of that hot air. It's been choppy. It's 73 down to 63 and then back up to 70. It's been sold off again. So it's certainly volatile, but you've got halving coming in April. So that's going to be interesting how that plays as far as it happens every 4 years. So I think it's going to remain choppy. And as far as US dollar index, well, you're sitting there at the best part of 104.70, 104.80. I feel though if you don't see a rate cut in that June period, it'll probably edge up over the next month or so if the talk is going to be to push it out. We've just got to see where inflation takes us. It's going to be a very interesting second quarter.
Okay, Peter, thank you so much for joining in with us this afternoon on EG Now. It's always a pleasure chatting with you and having you on the show. Thank you so much for that.
Thank you, Vinny.
Okay.
If you like this video, then like, share and subscribe to ET Now.